Will the world survive the next housing market crash? Given the known economic headwinds, a housing market crash will eventually happen, whether in the United Kingdom, Europe Union, United States, France, or even China. Experts forecast that the housing market will collapse in 2023 on a global scale.
This is a case where voter sentiment about the economy and where the economy is headed are actually in sync, correct?
Potentially, yeah, to the extent that people are worried about a recession. It is a abiding concern of economists, forecasters, CEOs, Federal Reserve officials. Kind of interesting that such a small percentage think we're in one now. There's a lot of talk about are we in one yet, but 59% think that's to come, which is not a very good number. And Chuck, I want to say you were spot on starting with housing because, you know, I've been doing this poll for 14 years, which is ridiculous to think about it, but nothing colors people's attitudes about the economy.
And that the fall will be sharp. Stay until the end, because the question of today's video will be: will house prices ever return to their normal pre-pandemic levels? Or should we expect the worst-case scenario in 2023? But before moving on, don't forget to subscribe to Financial Countdown and ring the bell to be notified when new content comes out. Data and market reports suggest that market turbulence caused by government policies is worse than expected. In the UK, the typical house price fell to £7,000, while we are also witnessing a sharp decline in house prices. Markets and experts describe it as the fastest and largest decline in housing prices over the past 15 months. For the first time since the last market recession in 2008.
What is your feeling on financial security? The biggest check you write every month is either for rent or a mortgage. And this is where you come in. You were sounding the alarm bell. You're fearing that the housing market is crashing.
It is crashing. And, you know, what's really, it underscores is how it is, we've seen rapid rate hikes, not just rate hikes on mortgage rates, they've been rapid rate hikes. And that's even more destabilizing than just moving up rates. And I think it's something that the Fed has understated in their own views in terms of how rapidly it's taken a toll on the housing market.
The pandemic's rapid spread, the war between Ukraine and Russia, and higher borrowing costs all contributed in some way to spreading the market turmoil. According to Robert Gardner, a nationwide chief economist, the mini-budget policy and bond cuts are the main reasons why the housing market will crash in the UK. Over the past 3 months, Britain has seen its currency decline against other currencies, such as the euro and the US dollar. Higher interest rates and higher borrowing costs had affected home buyers and sellers' buying and selling decisions. On top of that, higher borrowing costs had forced many mortgage lenders to suspend their loans.
Worse than expected, to 1.34 million, the lowest level since June 2020, that is down more than 11%. Joining me right now, the People's Corporation Chairman and CEO, Don Peebles. Don, good to see you this morning. Thanks very much for being here. Housing starts and building permits down this morning. What's your reaction?
Oh, not a surprise at all, and they'll keep going down. It's a double whammy. It's the lack of demand, the declining demand, because buyers and consumers can no longer afford to buy what they could have bought last year, or they're priced out of the market.
Meanwhile, the US housing market is already under Federal Reserve monetary policy pressure. Plus, inflation remains too high in the US. This week, several inventors and market experts forecast that the US economy will decline in 2023, especially the S&P 500 index. Despite a recovering labor market in the United States, Fed officials remain committed to raising interest rates. Over the past 11 months, the higher interest rate has caused a tremendous increase in the bond market and mortgage rates. During the first half of 2022, household and property prices peaked at higher levels for the first time since the 2008 recession.
For most of us, there's no bigger purchase than a home, and it's been a rough year for those looking to buy one. That's because of aggressive interest rate hikes by the Federal Reserve to beat back inflation. But mortgage rates have been trending downward in recent weeks. According to Zillow, the average 30-year fixed-rate mortgage has dropped under 6%. It had climbed over 7% just a month ago. Now, to understand what it would mean for buyers, let's do some arithmetic. Borrowing $300,000 at a rate of 6% would add up to $1,800 per month. That includes principal and interest. That same loan would have amounted to a monthly payment of just $1,350 at a rate of 3.5% earlier this year.
However, the worst is yet to come. Based on Morgan Stanley's expert market prediction, Morgan's expert predicts a 10% drop in housing prices by the end of next year, 2023. Inside the United States, some cities and places are already experiencing a decline in home sales prices. However, home sellers have taken significant losses. It's not only the United States and the United Kingdom that feel that the housing market will crash. Germany, France, Spain, and many European Union countries also reported the same issues. Okay, so what about China? Is the world's second largest economy safe from housing price crashes? The answer is probably no.
Evergrande is not an isolated case. The entire real estate market in China is a disaster waiting to happen. A housing bubble of epic proportions. If this sector collapses, it could take the entire Chinese economy with it. Our next report tells you how China missed the warning signs and what this could mean for the global economy.
Last month, China's economic reports and data showed that buyers and investors had backed away from the housing market due to weak economic growth and the government's new policies. The zero-COVID policy constraints, combined with the weak economy, limited market manufacturing, and consumer activity. On top of that, the home buyers are unsatisfied with the new policy, which led to their refusing to pay their mortgages, adding more fuel to the market turmoil. That said, we are seeing increased pressure on market affordability, which could cause a sharp decline in the housing market for the first time since the last global recession. On top of that, a worrying report was released by CNBC, which added that the tech industry in Europe is also under the pressure of higher interest rates. The tech sector in Europe's total venture capital may decline from its recent high of $3.1 trillion to $2.7 trillion. Your opinion is very important to us. You can leave it in the comment box below this video. Thanks for watching.